All right, I'll do a mic check on my end. Thank you for the introduction. Greatly appreciated. I think you guys can see my screen. Cracking the hedge fund code, Wall Street's Fibonacci secrets exposed. All right, guys, and I'll begin right away. 45 minutes isn't a lot of time for this webinar, so I'm just going to be kind of pushing through it. So bear with me, but excited to share this stuff with you guys. Before I begin, I will read a risk disclaimer. No representation is being made that the use of this strategy or any system trading methodology will generate profits. Past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading securities and options on equities. Only risk capital should be used to trade. Trading securities is not suitable for everyone. Futures, options, and currency trading all have large potential rewards, but they also have large potential risks. You must be aware of these risks and be willing to accept them in order to invest in these markets. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell futures, options, or currency. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in this web presentation. The past performance any trading system or methodology is not necessarily indicative of future results. All right, let's begin. So, first kid I ever taught how to trade. I'm going to start off with a little bit of a motivational story. He was 19 years old at the time. This is back in 2011. It was a friend of mine. His name was Josh Jacobs. He entered a trading competition. He came to me. He's like, hey, you know what? I want to learn how to trade. At the time, he knew I was trading. He was in school. I think he was a freshman at University of Illinois, Chicago. And he was like, I found this trading competition online. I don't know how to trade. I want you to teach me. I think I can win it. I'm like, well, okay. I mean, how many people are in the competition? He's like 300 people. I'm like, well, I'll teach you how to trade, but really, that's a lot of competition, and best of luck. So anyways, Josh entered the competition, won the competition, beat out 300 other traders that probably had 5 times the experience he had because he had only been trading 6 months, and for the average guy was probably twice his age. And this is actually a picture. So when Josh won the competition, he got invited to the floor of the CME. This is the first time I was at the CME, and he said, hey, you know what? I have my friend who taught me how to trade. Can I bring him with? His name's Jack Gleason. And they're like, yeah, come on down. So I got to visit the floor with him, the people that backed him with $150,000 or 15 lots in the S&P 500, which is $3 million of notional trading. So pretty incredible story, but that's the first person I ever taught how to trade and how I got into it. Josh, like I said, was a full-time student who got to mentor under me for 6 months. He wasn't a math prodigy. So what exactly led to Josh's success? It was discipline, patience, and he was able to watch me trade for 6 months on top of learning my Fibonacci strategy, which he applied those strategies to win this contest. The truth is we all start trading somewhere. Now, some of you might be twice my age. I started trading. I bought my first stock when I was 15. I'm 28 now. So 13 years, I guess I could say I've been in the market. But this is the first setup I ever had. It's my college laptop and a television that I used for watching TV my freshman year of college. It was my dorm room. And that's really, we all start trading somewhere. Some of you might be in a similar situation, except maybe not in a dorm room, but that's okay. At that point in time in my life, I was delivering pizzas as my job. Fast forward a few years, worked at a prop firm in Chicago, go from a laptop and a TV to eight screen monitor at a prop firm, trading 30 to 60,000 shares a day. I co-hosted a show called Get Trading at 22 with Tom Sosnoff, which was the first time I actually educated a larger audience to over 40,000 people. And then I co-founded Major League Trading in 2015. So we're going to be talking about Fibonacci trading strategies successful traders use to profit from the markets. I'm Jack Gleason, co-founder of Major League Trading. So the question, do Fibonacci's work? I'll leave that up to you to answer. This is actually the biggest P&L of my entire trading career. And if you can see that zoomed in, $232,000. Now, does $232,000 in a trade sound nice to you? Definitely sounds nice to me. That is my biggest P&L ever, straight off a Fibonacci sequence using Apple calls. So $232,000 trade, my largest trade ever. Here is actually the chart from that trade. This is prior to the Apple split, back when it was around 570 bucks. Most of you guys might not even been trading before that split had happened. So Do Fibonacci's work in all markets? Is it just indexes? Is it just futures? Absolutely not. It works in all markets. And because of the mania we've seen in the crypto markets lately, I decided to throw a couple examples in there of a 50% retracement pullback. Here's one in Bitcoin. If you guys remember the last time that Bitcoin pulled back significantly, it was right into a 50% retracement, and that 50% retracement was the last major pullback, and it was off of, there was a China band, and as well as Jamie Dimon came out and was like, Bitcoin's a fraud. Everybody remembers that comment. But all it did is it pulled back into a technical level where traders are ready to buy, and the rest is history. That was at 3,000. We're trading about like 17 grand right now. So it's not just that these types of strategies work in futures markets, which I trade them in futures markets and currency markets, but they also work in Bitcoin, you know, all of these different coin markets, as well as stocks. So this type of strategy, regardless of how you trade, your style of trading can be applied if you like stocks, ETFs, options, you name it. This strategy can be applied. This is a halfway back in Ethereum, and then the next measured move pulls back again. So it's just over and over and over again, these sequences are playing out across the board. So why do Fibonacci's work? Well, it's a naturally occurring math formula found in nature, and the Fibonacci system I'm going to teach you is specific to market psychology. Do you catch yourself buying at highs only to see the market reverse? Do you find yourself exiting your position on lows only see the trend shoot higher back in the original direction? Well, that's because of guys like me, and let me apologize first and then explain why this happens. So this is a Fibonacci setup here in the Australian dollar USD. So like I said, I want to give multiple examples across different asset classes so you guys can see this system playing out. So there is computer algorithms that attach themselves to pullbacks, and when we have new swing highs and we begin trends, every trend begins with a 50% retracement of some sort. As you can see, the market will consolidate in the blue line is that 50% retracement, and the market will consolidate here until we pull back into that level. And when these levels are touched, you have what's called MIT orders, which are market if touched orders, and that's why you'll see that reaction quickly off of those levels. Now, typically traders like to put their stops below lows, so every time we take out a low, traders are getting stopped out. Well, how do you think the traders felt when they got stopped out right into that 50% retracement, and the market continued rocking higher up into the original direction of the trend, which was higher based on this new swing high, higher lows, higher highs, that defines a trend. Same setup in the oil markets. Once again, different market, same strategy. You know, you're looking for a nice clean run up, that 50% retracement pullback, that is your buy zone level, and that's 55.86, and you can see we quickly run off that level and rotate from that. Same setup in the NASDAQ. Low to high, we pull back into that 50% retracement. Now, the reason this works from a psychological perspective is as traders are getting long, sooner or later we run out of buying pressure. And those traders who buy those highs set themselves up for a pullback, because as soon as we fail to make a new high, anybody long from a poor trading position begins to feel weak in their position, and they get stopped out, which leads to other traders getting stopped out, and as price rotates down, we will continue to move until we trade into a major support level. And that major support level is typically a 50% retracement from the beginning of the move. And this is a sequence, like I said, you'll see play out in every single market because it has a psychological factor. This is that same setup in gold. We get a run up, we pull back on that 50% retracement, we complete profit targets, and after the completion of profit targets, you look once again for that next move, that next low to high. What do we run into? The 50% retracement. You can see when these levels trade, there is a quick reaction off of them because the dominant trend in this case is a long, and when we pull back into that 50% retracement, what you're doing is you are shaking out those weak hands. You are taking out traders with weak positions, and then there is a whole new wave of buyers that fuel the momentum back up into the continuation of the trend. Now, there's another way that fibs work, which is a strategy that I teach, but this is, a short example. Once again, in the currency, you have a consolidation trading here, and then once you get that breakdown, now a lot of traders will try to anticipate the breakdown or breakout of a level. That is not how I trade. I like to wait for confirmation of the break level and then enter in at retracement levels, in this case 50% retracement short. So we get that breakdown. The blue line once again is that 50% retracement level. And what is obvious here about what happens when we trade into that 50% retracement? Just as obvious as it was in the previous examples, where the level trades and we instantly have price moving away from that. Okay, instantly have price moving away from that. That is because there is, institutions, hedge funds who sit and wait for these perfectly timed trading entries. Now, timing really is what trading is about. It's easy to get the direction right, but are you right at the right time? And the crucial point about, for me, timing is the entry at very specific points. So, we have that consolidation below, we pop up into that 50% retracement and rotate down. When we have aggressive selling, you can then begin drawing the low to low. Now, this is a trade in oil. For those of you guys who are swing traders, once again, same strategy. Now this same strategy, now I'm going to show you it working on a different time frame. This time frame, the daily chart of the oil market, which has had a really nice rally pretty much since June. You have a massive swing high. Each one of these candles represents a day of time frame, and then we pull back into that 50% retracement. When we pull back into that 50% retracement, we rotate up into that profit target right here, okay? And then after that profit target completes, all it is that low to high. And these targets are $4,000-$5,000 targets on one futures contract that take about a month long, okay? So, I mean, if you can take one trade, make $5,000 and wait a month with a 6-to-1 risk-to-reward ratio, that's something I would want to be a part of. So the stop here in these situations is below the 61.8. The target is up here at this green line, which is a -23. Okay, and that's just how the sequence plays out. And because there's institutions trading these levels, you have massive moves like this one right here. You run into that 50% retracement. What do you notice when we trade that 50% retracement? Price is instantly moves away from that level and continues into a new high. These are the traders who are unaware of this strategy and sell at lows. They fill the traders who are aware of this strategy, and then when those traders get filled, they run it into highs. And as we hit profit targets here and here, those same traders who sold at lows now think it's a breakout and are buying into the profit targets. So it's kind of hard to get ahead of the market if you don't understand the way retracements work, because with every trend move, there is eventually a counter trend move. And to understand where that counter trend move ends up going is absolutely crucial to trading strategy and success. Same setup here. This is a short. Rotate down. Everybody's getting short. Everybody's getting short. Market opens at 9:30. We get a sell-off right off the open. Traders get stuck on those lows. They get squeezed into a proper entry, the halfway back short, and then we roll down and quickly hit profit targets. Once you understand how this method works, you will see it applied over and over and over and over again, really until your total opinion on the market changes. So you got to ask yourself these questions. Do you find yourself having trouble looking for an exit? Do you find yourself jumping into a trade early only to be stopped out before the market moves? And if you had a method that showed you where to enter based on math, would you be a better trader? And the fourth question I have for you, are you looking to learn a formula to eliminate human error by applying system-based rules? Without systematic-based rules, it is very hard to perform in the market. And if you trade with the purpose of growing your account, regardless of what strategy you use, you need to have a rule set, okay? And if you don't have a rule set, it's time you learn one. So I use scans to find candidates that are trending. Now, I don't use lagging momentum indicators, but I will run momentum scans. Momentum scans will tell me when a market is breaking down. That's not going to give me an entry. It's not going to give me an entry. What it is going to tell me is that a market has begun potentially a correctional move or the beginning of a new rally. And then what I look for is I use my Fibonacci strategies to come up with a buy and sell zone depending on the direction of the trend. So in this case, scan pulled up a short sequence. We run or a short trend. You can see, the market begins falling out of those highs. We take out a swing low. We take out a swing low. Many wide body candle bars down, and then we run into the entry point at the 50% retracement. Within 24 hours, we're rotating down and completing those profit targets. But everybody in here has poor entries. It's the traders who sell that 50% retracement that find themselves in the best position. And when you find yourself in a good entry position, it becomes much easier to hold to full profit targets. This is another example in oil. So when you're using stops, you want to be keeping them behind that 61.8. So the other thing that's great about trading Fibonacci's is outside of just finding proper risk levels and target levels, the ratio of where your stop is to your target is 5-to-1 or better, because the distance to the 61.8 versus the distance to a negative 23% profit target is 5 times larger. So you could literally be wrong 4 trades in a row, hit the 5th, and make all of that money back. Paul Tudor Jones, one of the best traders in the world, only takes trades with 3-to-1 or better, typically 5-to-1 risk reward ratios in his favor. You're not going to be right all the time, so it's important how much you lose when you're wrong and how much you make when you're right. That's a famous quote from George Soros, one of the best traders of all time. Same setup here in the Australian dollar, US dollar. This swing high, swing low, we rotate up into that 50% retracement, and then we begin selling from there. So, if you have a problem where you really you don't know where to enter the market, you're falling behind, you feel like you have no strategy, or your strategy is not working well for you because your entries are either poorly timed or poorly positioned, you need to look into learning a Fibonacci-based strategy. So here's a perfect trade we had in gold last year, and in fact this trade just set up again last week. The low from the end of 2016, which was, I want to say it was the 13th or 15th of December of last year, that was the major swing low, and then gold actually had a really nice rally into 2017. It did top out in September, but that low to high came to the tick. You see how this runs to the tick into that buy zone and then goes straight into that profit target to the tick. Now, do you think that's random, or do you think that maybe there's some institutional money behind that? Me and you, we don't move the markets, right? We have to ride the coattails of the people who move the markets. We're not, you can't get in a position and just assume that you're going to push the market higher, you're going to push the market lower, or you're the deciding factor of price action. We are so small as traders, as retail traders on the entire level of trading, that if you don't know where institutions are buying and selling, you are going to find a hard time riding the trends that they're looking at. So if you could make a year's salary in one day, what would stop you? If you could make an entire year's salary in one day, what would stop you? Now, my biggest trade on the year was $72,000, and that was on August 10th this year. Here's $50,000 of that P&L. This was in Nadex, for those of you guys who know what that is. So I trade Nadex and futures with these types of strategies, but this day I made about $70,000, and just in one trade. And it was one of the biggest moves down all year. These are the types of trades that I call my vacation trades, because after I hit one of these trades, I take myself on vacation. Anytime I take a trade and make more than $50,000, I book a vacation. It's just kind of a way to reward myself. Now, it doesn't happen often, but a couple of vacations a year to some really exotic places is the whole reason I trade. So I took a vacation to Bali, and these are a couple photos from that. Really cool place. Definitely recommend checking it out. I'm only 28, so being able to travel the world and trade is probably the coolest thing that I do in my life. But why are Fibonacci's so powerful? All right, why is this something that you want to learn? In order to thrive in this market, a trader must strictly limit risk in the face of volatile market forces. Over the last couple of days, we've actually had a decent amount of volatility in the indexes. With the tax plan being passed, etc., there is a lot of opportunity on both sides of the market to make money. So you need to learn how to limit the risk, so even when you lose, you're able to jump back in without being hurt, without being emotionally damaged, without damaging your account. You need to learn how to grow a smaller account fast by also correctly managing trades, taking off positions before they move against you. This is the secret. Limited risk plus high reward setups, and then timing those perfectly. If you can do that, you will achieve every goal you have set out in trading. All of your goals, whatever it may be, could be spending more time with your kids, could be saving up for retirement, could be going on vacation in Southeast Asia. I don't have kids, so I'm able to kind of be a little more spendthrifty with my cash, but maybe you do, and you're just looking for a strategy to kind of take you to that next level. So this is a picture of Josh, first trader I ever taught, who beat 300 traders in that competition that I talked about. If he can do it, I think anybody can. This is a kid who had no trading experience, in college full-time, and learned how to trade part-time. And somehow, using the strategy that I taught him, beat 300 traders. And my goal in 2018 is to create more Joshes, more people who are able to go out there and absolutely crush the markets with a whole new trading system. So no matter how volatile the markets get in 2018, my goal is that you are going to have the skills and confidence to make a consistent living from your trading and investment accounts. And while consistent base hits are a good thing, I want you to be able to pinpoint those high probability opportunities in time where if you choose, it is okay to make larger bets with limited risk that can potentially take your account to the next level. The home run setup. So this is the setup that I took that netted me over $70,000. So there was actually in this one setup, I had structured the trade there was actually 4 different trades inside this trade. This is a high probability opportunity in time that these are the best trades I like to identify. Using Nadex, my best trade out of the 4 trades that I took was $1,000 of risk. And on that $1,000 of risk, I was paid out 18 grand. So understanding when to take these types of trades is what's going to grow your account. Taking these trades without having the skill and the knowledge to develop and understand when high probability opportunities in time come is death by 1,000 cuts. Reality check. Ask yourself this simple question. Can you say with confidence, I have the tools and the knowledge to make the same trade the next time that setup happens? Getting in and getting out early. The secret is to be able to anticipate the move, not react to it. It is also important to control emotions of fear and greed, which can always cause people to do the wrong thing at the wrong time. How? Take emotion out of it with early warning signals. so you can get in early and get out early, then move on to the next, quote, easy trade. You need to be okay with your risk on every trade. You cannot be taking positions where if you lose, it will damage your mental ability to execute the next trade or your financial ability to participate in the markets. If you are putting a trade on where if you lose, your mental capacity to take the next trade and your financial capacity to take the next trade is eliminated, you will never be successful. So you need to understand risk and be okay with it for every trade. Regardless of how much you think you can make, you need to be okay with what you can possibly lose. And that is crucial when it comes to trading. Now, is this type of strategy good for new traders? Wouldn't you agree that this is the perfect strategy for new traders to grow small accounts quickly, to learn how to trade these precise setups because they can happen each and every day? We don't like risks. Fibonacci's are safe, no random orders with unlimited risk. No random entries without a game plan. Every single trade taken has a exit, stop, and trade plan based on math. You take trades with limited amounts of risk that you control. You are in control of the risk. And you need to remember that the risk is your responsibility going in every trade. You need to think about the risk as your child. You need to take care of that risk. You need to be okay with that risk. You never want to put yourself in a situation where that risk is going to damage you. You don't need to know anything about futures trading or technical analysis or even the stock market. The course I'm going to show you guys about Fibonacci strategies is going to teach you everything. At the end of the day, I'm a trader, and for now, I do not mind sharing what I'm doing. At some point, I'm going to stop sharing. Why? Because my life is going to be way easier. I'm really not the perfect teacher, and I don't like selling stuff. But I am very passionate about what I do, and I love to connect with others in the trading community. I do meetups everywhere I go. LA, I did a meetup in LA, Las Vegas, New York, Chicago, all this year alone. And if you have the opportunity and you follow me, I recommend you to keep an eye out. You can follow me on Instagram, Major League Trading, or check out my YouTube at Major League Trading. So never forget, trading involves risk, and profits are not guaranteed. But if you're serious, trial and error is the most expensive because it not only wastes time, but it wastes money as well. Now you can put the benefit of more than 10,000 hours of experience in your hands. Because remember, if Josh can do this, you can do this. If you'd like to sign up for my course where I teach this Fibonacci strategy in full detail, you can type this link into your browser. It's www.buythiscourse.com. Check it out, guys. And if you're going through the checkout process and need help expediting your order, you can call us at 323-786-2575. I probably can't pick up because I'm in a webinar right now, but leave a voicemail and I'll get back to you. Feel free to email me at any time, support@majorleaguetrading.com, with all of your questions, and I'd be happy to help. Trading isn't a group love fest. It's a competition. Other traders and market makers have one goal only, and that is to take money from you. My life work is to level the playing field when it comes to the markets, to teach you the strategies that I use so you can implement them yourself. On demand right now, you are going to learn the 6 separate Fibonacci setups that I use. All classes are recorded for lifetime access. With the purchase of this course, you are going to get my bonus Bitcoin futures trading class. You are going to receive 12 months of weekly swing trade alert videos. Every single week, I break down the most technical markets and then choose one to focus on. This week was copper. If anybody's taking a look at that chart, it's one of the most bullish markets today. Every quarter, you are going to get a private class fib instruction. These are going to be held during rollover. So March, June, and September and December of 2018. So these are all going to be part of the course. So you're going to get 12 months of weekly videos on top of the course. You also get a bonus Bitcoin futures trading class. On top of that, it's a privately quarter mentorship in March, June, September, and December of 2018. Now, Nadex and futures are my focus. Fun fact about me, I have the largest P&L videos on YouTube for the entire binary options product for Nadex. So, I'm not some random jamoke teaching this stuff. I'm literally the largest trader on YouTube for Nadex. So if you're interested, you go to www.buythiscourse.com. And if some of you guys have some questions, I'm lost. Will this be over my head? I've been told I'm a good teacher, and after this class, it is my goal that you will have a very simple set of tools that you can teach a blind man to do this. 90% of the information out there on trading is either useless information that isn't necessary but is extremely confusing, like 12 different indicators on your screen, and when the green line crosses the red line and then the dots match up with the squares, we buy, but we only buy 2 and then 1. Forget about that stuff. Everything I teach is math-based, rule-based trading. A lot of stuff out there is also too conservative for my taste. I'm not looking for 10% a year. 10% a year isn't worth my time. When I first started trading, I was delivering pizzas. If I wanted to move away from that life, there was no way I could do it making 10% a year. And then the worst, people who use lagging momentum indicators with 5 squiggly lines and they don't even look at price action. They're still crossing their MACD with their RSI. I mean, guys, MACD and RSI were literally invented before any modern technological piece that you use. Technology moves fast. Those indicators are old. Older than Facebook, older than the iPhone, older than modern day high-speed internet. My job is to filter out the information and just show you what is the most simple and most powerful, so you can forget the rest because you don't need it. Do I need indicators? Most of the tools and indicators I will be using are available for free on Thinkorswim platform. There are no monthly fees for the platforms we teach on, no aftermarket costs. There aren't any expensive add-on indicators needed to do these strategies. There are some I like to help with managing targets that are nice, but you don't absolutely need them to perform, and there isn't another charge. I will be using custom-made Fibonacci levels, NICE internals, and the tick symbol, and a few others geared at finding support and resistance levels. I will also be using scans for trending instruments. Questions. How does this class differ from the Nadex Master Course, Trade Room, or Bootcamp, which are some of my other courses? In this class, I teach the heart and soul of my strategy, the Fibonacci method. In this class, I will be teaching Fibonacci setups that I only teach to my most dedicated students that are serious about wanting to learn to trade and are ready to commit. You are going to learn a technique that I've only taught a handful of traders. This is not information I make public, since it's the secret to my method. If you haven't taken any previous courses, the setups in this course will be explained in great detail and thoroughly studied with examples. There will be some homework for newbies to get you up to speed, but don't worry, it's not that much. Then you got articles about, volatility and why volatility hurts and what to do about it. Guys, volatility is a trader's best friend. And if you have a hard time trading volatility like this guy who wrote this article, you need to learn a new system, a new strategy that captures profits in volatile moves. Okay. Now, just to break down the entire value of this course, you're going to get 12 months access to weekly swing trade video alert service. That is worth more than the entire course. It's a $1,499 value. Then you have 1 year access to the quarterly private class trade review, which is going to be March, June, September, December, where I put away time to go through all of your questions, any setups you might have, any questions about the course, any questions about any of the swing trade alerts. This is going to be a lifetime access class. I'm going to be doubling the content and delivering that in March. You're also going to receive a bonus Bitcoin futures trading class in February, and you are going to learn the 6-to-1 risk to reward trade that I use to catch the high probability opportunity in time. You can get started today for actually $0. You just have to click the PayPal option. For the next 6 months, zero interest is $0, which comes out to like $165 a month if you pay it, which you should. You can get started for actually nothing today. You don't even have to pay today. Just click the PayPal option on your checkout and apply for PayPal credit, and you can have the entire course for $0 today. 6 months, zero interest. Or you can choose a one-time payment of $987. All you have to do is go to www.buythiscourse.com. With that being said, I will take any questions that you guys might have for me, or if you guys would like me to go over any market and show you the strategy, let me know. Does this strategy work on stocks? Yes, it does. In fact, that is stocks, specifically options on stocks, is what I used to make my biggest P&L ever in my life, which is $232,000. Do you use this to trade oil? Yeah, in fact, let me show you an oil trade here today using this method. So oil inventory report is every Wednesday. We traded from the swing low at the beginning of the week to the swing high and stopped right at that 50% retracement. So if you're an oil trader, this is a strategy you're definitely going to want to take a look at. How long have you been applying this strategy? I've been applying this strategy for 7 years. Do you do private mentoring? I do. I do private mentoring. But I'm fully booked for the next 3 months. I only do 2 sessions a week. They're $250 an hour. I actually have a position on that I'm managing, so I'm going to have to get back to the market. But thank you guys for your time here today, and I will let Traders Talk take back over.